is 8:24. Let's go over to Tokyo and speak with Nick Smith, Japan strategist at CLSA. Morning, Nick.
Good morning to you.
So we've been talking this morning about some of the investment themes for the second half of the year. What do you think is going to dominate in Japan as the main themes?
Well, obviously, there's a lot of talk about inflation, which is only about to 2.5%. But for Japan, that's a lot because it's had none for 2.5, 3 decades now. So I think people are frustrated about that. It's forced the government into an incredible muddle of, on the one side, having the Bank of Japan printing money to generate inflation, and then on the other hand, it's offering subsidies to take that inflation away. But as far as investments are concerned, the focus is on some kind of yield at a time when interest rates are in real terms slightly less than nothing, and more than anything else, it's the return of investment rather than return on investment. So some kind of defensive that's going to get you to the other side without losing your capital.
So you mentioned this policy muddle. So in effect, the Japanese government is paying subsidies, and it pays for that by issuing Japanese government bonds, which the Bank of Japan then goes and buys to help keep inflation down. And then at the same time, the Bank of Japan's got a very loose monetary policy to try and get inflation up. So where does it go from here? Surely it can't do both, can it?
It can do both. It's just not very logical to do so. So I think part of the problem is the government's got upper house elections on the 10th, and the inflation that it's getting is extremely unpopular with voters. Once we get to the other side, the government, I think, believes that oil prices will slip back down again. That's moot, but believe that they'll slip back down again, and that very much in the along the lines of the Fed, which earlier this year was talking about inflation being transitory. I think the Japanese think the government that think it's transitory too, probably with similarly embarrassing results.
So what's happened to all these efforts to get wages up, which the government wants to see? Have people just given up on that idea now?
Obviously, if you look at the Japanese labour market, it's just about run out of people. So since the beginning of 2012, the number of people in the working age population's shrunk by 6.6 million, and the number of people in work's gone up by 4.4 million. And you divide the one by the other, so employees as a percentage of working age population up at 91%, and you think, gosh, well, within working age population, we've got nursing mothers, we've got high school students, we've got university students. It's not going to go much higher than 91%. We're pretty close to the point at which Japan just runs out of people it can squeeze out of the population. So at some stage, logically, wages ought to be thumping up, but at the moment they're absolutely not. And the problem is the working population is just so docile that they'd rather stay in the job and rather than take a risk of moving to another company that doesn't treat them so badly.
So one of the consequences of all of this is that the yen has collapsed. It's still collapsing. Some people say it may hit 150 against the dollar soon. I remember when I used to live in Japan back in the 1990s, there was also a collapsing currency then, and Haruhiko Kuroda, who was at the Ministry of Finance at the time, said a falling currency is very bad for the economy. Does he still think that now?
No, he continues to thump the table, saying that a weak yen is good for the economy. I think there's a certain amount of evidence that he's correct. If you look in terms of the real effective exchange rate, which is trade-weighted yen adjusted for the fact that actually Japan's got much lower inflation than everywhere else. So it shows the competitiveness of price competitiveness of Japan. That's back to where it was in May, I think, of of 1972. So in those terms, Japan is brutally competitive. Japan spent the whole sort of 1990s and the noughties offshoring, and now it really needs to think about onshoring again. So I think it's very, very competitive indeed as a production base, and that'll paper over a lot of cracks. But obviously, investors are at least as much at the moment thinking about, fine, that'll paper over cracks, but the cracks are coming from a slowing global economy. So it's amazing how little correlation there is between yen sensitivity and share price performance at the moment.
So where do you invest in this environment where interest rates are still low, but global rates are going up fast? The currency is depreciating quite rapidly. Where do you go in Japan to invest?
I think that the leading indicators are suggesting improving domestic and particularly service side of the economy. So you need to be domestic, not export-driven side of the economy. The market is absolutely desperate for yield, so you want something with a decent dividend yield, and the market's very concerned at the moment about recession, so you want something like Minvol, or certainly stocks that are defensive. So it's important to look at companies that have give you good dividend yield, give you good long-term growth in those dividends, and they don't cut it in tough times. And obviously, some of the areas that have historically been good for that are pharma and telco.
Nick, thanks very much indeed for those recommendations and suggestions. That's Nick Smith, Japan strategist at CLSA in Tokyo.